All right, welcome back, everyone. Back to the channel. It's been almost a week since last week. If any of you were watching last week we did the stream with Mo Crypto Moses, and yeah, he talked a little bit about his trading strategy. I talked a little bit about my trading strategy, my plan, basically my hands-off approach. I try to be as much hands off as possible. Obviously, I like trading a little bit as well, but I am focused primarily at limiting my time on the charts to be able to either research other coins, other projects, but also I'm able to diversify a lot more because I'm looking at both crypto, I'm looking at stocks, I'm looking at uh, possibly peer-to-peer lending or even other avenues such as real estate or other like small ways to create, let's say, passive income through possibly even staking or dividend income, etc. And all these little things, like, they add up, they snowball, and a lot of them are almost hands off. So you save yourself a lot of time, and time basically equals money. So the more free time you have, the more time you have to learn, to diversify, to invest, to basically create a stable income, side income, and also prevent yourself from losing money on bad bets or basically assets you don't want to be buying, or trading methods you don't want to be using. And I think that's very important. Like, if you prevent yourself from losing money, you're going to make money. Because if you have a job, at least, or if a day job or whatever, I'm assuming most people do. If you prevent yourself from losing money, eventually the money you generate, it's going to stack up. And the more you stack up, the more you're able to save, the more you can benefit from that money, make that money work for you. And it'll start snowballing. And then it'll start snowballing a lot quicker than you think it will. And that's basically what I wanted to talk about in this stream. I think it's a little bit of an undervalued subject, considering a lot of people are aimed at trading. We all want to see those big profits, those 100% margins, 200%, 300%. And I think those margins are possible, but in a different way. So instead of trading 1 or 2% of your account and trying to maximize the amount of trades you take and try to set tight stop losses, trying to out-trade markets, really, I think the reality is, for a lot of people, they will not be able to do that, or at least not consistently, because you need a lot of time. And for people who have day jobs, just like me, I don't think you have the time to be able to become a decent enough trader where you outperform crypto markets. I don't think it's possible. What is possible is basically riding the waves that bigger whales, bigger investors generate. And I think it's relatively easy to do, but it takes a lot of discipline. I do think a lot of that can be fixed with automation. So you save yourself basically even more time, but you're able to automate strategies, which will in turn generate you a lot more money than you would have ever traded yourself to. And you stop yourself from losing money. So I think that is also a very important part of this. So I'll just grab the chart real quick, or at least let's start at CoinMarketCap, as I always do. I saw CoinMarketCap added a cool new feature on their front page, the average crypto RSI. Now, considering today is a red day, we're seeing that we're moving slightly towards the oversold area. Yesterday it was on 50. It was basically in the smack dam middle. So I think that correlates quite well, considering almost all crypto, or at least almost all crypto in the 24 hours is down. I mean, it's a few percent, so it's not too bad. I think it was close to somewhat of a reversal, somewhat of a collection. Let's say we're seeing more buying pressure. So I don't think it's too bad. The total crypto market cap yesterday was 3.85 out of the top of my head. Today is 3.78. So yeah, it's a few percent down. It's not too bad. What I do dislike is that we're moving slowly but surely farther away from that 4 trillion. I've talked about that in the past, that I think that $4 trillion total crypto market cap is a little bit of like a psychological level. I think once we fully break that $4 trillion market cap, I think that will usher in a full bull run. Like that will tell people like there really is new money in crypto. And I won't say the sky is the limit, but I think that'll push a general big volume push more into crypto markets, which will be proportionally divided along all these assets. So I think that is definitely something to keep an eye on. But I've said it in the past, you could basically trade the fear and greed index, and basically by selling red, buying green. And I think that still tracks. And I think if you basically compare it to this indicator, they're very close. But this is basically means like the fear and greed index. If we're in extreme fear, it means it's oversold usually. So when it's oversold, what do? We buy more. And when it's extreme greed, means it's overbought. So it's very likely to correct itself. And we're seeing this now because we touched that extreme greed just a few weeks ago. And right now we're seeing lower prices. So as I said, you could 100% trade purely on this indicator. You could also do the same for this one. And I think these are roughly the same indicator, but they're just worded differently. And I think it's cool that they switched the colors around. So basically green for oversold. So right now I can buy. It's red for overbought, which means don't buy. So I think that's a very, very neat trick they added. Good thing to keep an eye on. And let's start with the Bitcoin chart. So let's just clear out all those lines really quickly. I trade purely with Bollinger Bands, support and resistance levels, or I do my investing on those levels, I should say. But I wanted to talk a little bit about naked price action as well. If you're not familiar with the term, naked price action basically means looking at what the price is doing and what the chart is doing without using any indicator. So I could turn this one off as well, and I can turn this one off as well. So if we're seeing these spikes, these movements, we're seeing, let's take this one for example. We have had a very big run up, very big spikes, starting to see a little bit selling pressure here. Then we saw a big selling pressure, another big buy. So it's very likely to see a correction, which happened. So if you look at the price like a rubber band, basically being stretched, we touch that overbought area and we correct down. And similar thing is just happening here. So even on this candle, considering if we're looking at purely support and resistance, I've not drawn any levels right now. This has been the past support. This is catching support. We're moving up. And technically we formed a higher low based on this little level here. So it's very likely that if this price holds or closes a little bit higher, that we could see maybe even a little bullish flag form here. Maybe we touch that level up. So the reason I keep all these lines is because I want to retouch like my earlier streams where I drew all these levels so that we can compare if our technical analysis is working. But this level I drew a few days, maybe a week ago, possibly weeks ago. I don't even really remember at this point, but we can see it's respecting this level. You can see it's respecting this level, and we can see it now. So if this holds, it's very likely that we see a bigger bounce back up. I do expect this to happen. There is a small side analysis to this. I think a lot of more volume is moving to Ethereum, and I will touch on that on the rest of the stream, why I think that is and why I think it's happening. And let's grab the Ethereum chart in the meantime, because we can basically see the exact same price action happening here. Even though the candles don't align 100% anymore, let's just turn off that Bollinger Band. we can already see here, we saw a massive candle up, we saw stagnation, and we saw a correction down. So purely on naked price action, this was very expected to either go up or down. So if you are trading and had your stop loss here or had your stop loss here, so let's say you took both sides of the trade, you would be stopped out on the first one, but you'd make a lot of profit on the second one. So you could actually hedge your own trade on this. For the DCA buyers, percentage-wise, would have been a very nice entry. So from all-time high, we dropped down to roughly 11%, very nice entry. Even for a low leverage long, even possibly a short here and there if you traded for, if you're more into scalping. But as you can see, we caught that lower level again, we moved up, and then we started seeing the sellers really take over. So we basically deflated. We exhausted the buyers. So we started seeing this, like this small really movements, little compression on the price as well. And now we turn on these levels. So that's where you start drawing your line. So you see that this is basically a support level. It's not really a resistance level because we're still holding it. Now I drew this level basically when we were at this price level. So this is a zone I drew earlier, but it's still respecting that level. And this is all on the daily chart. So you can see that these daily levels are being respected quite easily. So it doesn't really have to be that precise to have meaning for us. So it does look like now, while I'm streaming, that it's looking like it's moving a little bit downwards. Even then, there's a support level right below that, and we could respect that. So if you have not gotten in already, this might be a good entry for you. You could take a little bit lower. My last buy was around this level, so basically exactly at the price we are now. So I'm not going to buy again because it feels counterintuitive to me. I would be buying if we're dropping further down, or maybe if we go up and we have another dip down, that's where I'll place another buy, even if the price is higher than it is now. At least for the shorter term, that is how I place my trades. Now, at the start of this video, I did talk about doing that DCA and basically automating it. So had I done that and had my automation bought at that exact moment, no worries. I think any price we pay now is compared to in the next 10 years is super cheap. But I do want to touch a little bit on that. I found this cool calculator, the Crypto DCA calculator. And as I said at the start of this video, I do not think every single person has it in him or her to be the best trader around. I don't think everyone is capable of beating the crypto markets in general by trading, or at least not consistently. So eventually you're gonna mess up on big leverage and you're gonna wipe an account. It sucks. It happens to almost everyone that trades. Pretty much everyone that trades has wiped an account. There's even strategies built around it, trying to maximize profits before you wipe your account. So it's not the end of the world if you know how to manage it, but I think the risk that comes with it is very dangerous, especially if you mess up on a setting or you forget to lower a leverage or forget to set a stop loss. Believe it or not, it's actually something that is quite common and has happened to a lot of people. And if you open a leveraged long, let's say at this price level, and that price dumps like 5% and you have 100x, then you instantly wipe your account if you have cross margin set and not a stop loss set. So very dangerous to do if you're not always turned on. So that's also a little bit why I was talking about it. I think a free mind a clear mind is something is worth a lot as well. And I've traded a lot in the past. I've traded Forex, I've traded metals, I've traded, I've used trading bots, I've used expert advisors on MetaTrader, other programs. I've even been a signal provider for a while, but I just did not want to deal with the stress that came with it. So I think the Crypto DCA way is a great alternative to have roughly the same profit over time but it feels slower because you're not actively trading every single day, but you don't have to be. So you save a lot of time, and time is money. But yeah, let's say we buy Ethereum and we buy $100 a month of Ethereum. And I think that's very reasonable, especially in crypto land. I think a lot of us spend a lot more. I know I have, but yeah, let's say $100 monthly for the last, let's say, 5 years. Or I cannot project it 5 years into the future, but I think the last 5 years were very representative, considering we also had a few poor, badder, worse years in there. So it's not always, the last 5 years have not been an extreme bonanza, have had very good years, but also a few poorer years. And let's compare that to Bitcoin, just for the heck of it. So had we invested, wait, I did not set the date actually. So let's say January 1st to, well, let's keep it at today, but let's say January 1st, 2020, we started to 2025 till now, till exactly now. You have invested $6,900. So even with just $100 a month, which you could probably afford, you save up nearly $7,000, but its total value would be $33,751 just by putting away $100 a month. And once again, you can automate this, so you do not have to actively manage this. This is just a set and forget strategy, and you could set this and never look at that account again up until the point, like in 5, maybe 10 years, and you could still trade on the side of, if you have the funds. Like, there's nothing telling you that you can only do this or you can only do another strategy. And I do this personally, I do this on stocks as well. So I have multiple different exchanges, different strategies. I think this strategy is, you cannot beat this. There's very little traders who in 5 years will almost quadruple their entire account. And that's the point I'm trying to make. Like, you see these percentages on a single trade, but what people forget to mention is that it's usually only with a very small percentage of their account, and it's only a very few winning trades. And there's probably a lot of them also ended up losing trades, or you end up in a drawdown of which you try to DCA your way out, and you end up wiping your account completely on that as well. Right now, we're relatively in a bull market, so everything's going up and everyone can trade a chart that is only going up. But if you get caught out, and a lot of people do, they become overconfident, and you get caught out at the end of a bull run, you wipe your account, and then it's 2 years or 3 years of a bear market and you make zero money, because you have to rebuild your entire account, your entire portfolio. And like I said, you could automate this. You could do this, and then you could go out with your friends. Like, you could completely forget about your entire account. 33,000 is still a lot of money. But let's say, I don't know, you put $500. That snowballs so much quicker. Like, that snowball keeps going. And like I said, like, if you able to do this, let's say some people could put away $1,000 a month. Let's say you make that. Let's say you put 500 away into this. It still leaves you with $500 a month to possibly trade with, or do stocks with, or buy real estate funds or trusts, or any other avenue you want to pursue. But this percentage, I don't think a lot of traders can beat this. I have not met a lot of traders that can beat this. And by the way, if you feel differently or have a question about any of this, feel free to post a comment. I'm reading them as we speak, or at least I'm able to see them as we speak, and I'll reply, or I'll work it in the stream as well. So for people that joined a little bit later, I was talking about alternatives to trading. I think, like I said, I think a lot of traders become overzealous, end up losing. And I think the key to making money in crypto and making money in general is to stop the bleeding, like to stop yourself from losing money on trades, on over leveraging, or on taking unnecessary risks, or buying meme coins for that matter. I think this is super sustainable. It's super easy, and like it doesn't have to be Ethereum or just Ethereum. You could do this on multiple assets. And if you've watched any of my streams, you know I'm a big fan of BitUnix, and BitUnix just added this function on their platform. They have a spot auto invest function, and you can create your own, or you can basically pick one out of the top blue chips, classic meme coins, or whatever. And you can even, it's not really a backtest function. They are working on it. It's not completely in there, but you can see like the 5-year historical return rates on these coins. I mean, look at these percentages. So that these are even better really than this result. This result is worse because you're also buying the tops, but we don't know when the top is or when the absolute top is. So we don't know when we're not supposed to buy technically. I mean, at this point, or at the current level, I'm only buying very small amounts. I'm waiting for either a bigger correction or a bigger cool down where we see, all right, now is done. But I think we're still in a very bullish market right now, so I am buying, and I think there's massive institutional interest. I have a few articles I will get to in a little bit, which basically to me confirm my strategy that buying Ethereum is a very good thing, and basically similarly for XRP and Bitcoin, but for that matter, because they're like these companies, they're not just buying one asset, they are also diversifying into multiple cryptos. So do what the big players do, then they're usually a lot more in the loop than we are. So why not completely copy them? Like, better copy someone than do poorly on your own, I suppose. But yeah, BitUnix has this function. I'm sure Binance or other exchanges have this function as well. I have a link to BitUnix in my description. It nets you some extra deposit bonuses or trading bonuses if you want to use that. If not, feel free to completely ignore that. I personally can't use Binance because I'm in the EU, which I really hate because I used to be able to use it. I really like their exchange, but ever since I've started using BitUnix, and yeah, I really like BitUnix because it has a lot of safety features. It has a little bit of insurance, and it also offers isolated margin for that very few occasions where I am leverage trading. So yeah, once again, be very wary of that. Now, Bitcoin, Ethereum, and BNB aiming new all-time highs by 2025 end. This article, it's a relatively new article, is based off yesterday. So they're not meaning the all-time high we already achieved. They're aiming at higher all-time highs. And I think it's very possible, like with this institutional interest we're having and the basic crypto dynamic shift, especially in the US, but that we're seeing. I do not think we've seen the limit. We're not nowhere near the limit is what I'm thinking. The speed at which we're going to go to these new prices, that's where I'm a little bit on the fence. But I've been proven wrong in the past. I mean, I was positive Bitcoin would achieve 100K. I just didn't think it would achieve it as fast as it did. I was pleasantly surprised on that. And after that, how quickly we achieved all-time high after all-time high after all-time high. And now with Ethereum basically having done the same, now cooling down a little bit. But what we're seeing is the interest and volume on Bitcoin cool down a lot quicker than Ethereum, which I think is a good thing because the volume on Bitcoin is moving to, well, Ethereum, possibly XRP and some others, but mainly Ethereum. And as long as this number, that total crypto market cap, doesn't start exploding, that's what we need. We need money from Bitcoin to move to Ethereum. Now, Ethereum is also still way up. It's not close to the 5K currently, but it's still way up from where we started just at the beginning of this year. So it's still done tremendously well. Um, but we need to see a little bit more of that volume from Bitcoin go into Ethereum. Right now we're a little bit stagnant. We're getting close to that oversold area. So I am expecting a bounce. I'm just not sure if it's going to be right now or soon. But I mean, as we're seeing, a whale sold $435 million worth of Bitcoin, and then they bought roughly the same amount worth of Ethereum. And whales keep selling their Bitcoin for Ethereum. What do they know that we don't? We don't know. We don't know what they know, but we do know what they're doing. And people with this amount of money are not moving crypto just for the heck of it. Like, they're in the loop, they're in the know, they know something we don't. And I think as institutional interest is increasing, and in this article there's a few points lined out which I agree with, like a rich infrastructural layer for stablecoin deployment. Now, as we know, all governments, all countries are looking at launching their own stablecoins. They want to do it on a network that everyone uses. They want to have it easily accessible, easily usable, and basically cheap, easy, and reliable to roll out as well. So Ethereum is a prime project for that, because we all know Bitcoin is way too slow, way too expensive. Ethereum has had similar problems in the past, but it's still the biggest network, or at least the second biggest crypto in the world, and I'd say the biggest network or usable network on the planet. So for now, I think the value, like exactly like this sentence is saying, like the value proposition of Ethereum is its global reach, its huge capital flows, its incredible programmability, and like it ticks all the boxes you would need to roll out an incredible crypto project or an incredible big stable coin, or like the digital euro. And the rumor has it that the European Union is looking to launch a digital euro on Ethereum. So it makes sense to hold crypto which are going to be used the most. And this is also what I think is driving the hype behind XRP, because they're basically calling it the new banking system. Now, I don't know for sure if it will be or if it won't be, but I know prices of it are going up. I know it's being bought up by whales, so I am buying that as well. So talking DCA, I have XRP. I re-added XRP to my DCA portfolio. Basically, at the second I read that the SAC court case was closed. Now, basically, this article is similar to the one before. Bitwise CIO Matt Hougan, professional investors are skipping Bitcoin and going all in on Ethereum. Basically, go where everyone else is going, and I think that is a very smart move to do. Like, yes, I also buy smaller coins. I mean, I hold coins like Kaspa, AVAX, Sui as well, because I believe in a healthy mixed bag, like a very diversified portfolio on that. But I think Ethereum is definitely my top crypto for the next 5 years, and probably even more than Bitcoin. And that is purely based on this. Look at what Bitcoin did. Had you bought Bitcoin? Or look what Ethereum's potential is had you bought Ethereum. So it's comparing Bitcoin to Ethereum. At the end, it's very close, but that is also because Ethereum has had a few relatively very poor years where Bitcoin outperformed Ethereum by a lot. But there is no guarantee that it will stay that way, because Bitcoin's market cap is so big that it will start needing so much money to push that price up percentage wise, that Ethereum could theoretically do a 4x before it reaches that same market cap. So I think that's important to take note of, that yes, I believe in Bitcoin. Yes, I think it is a very good asset, but I think the time to become a millionaire on Bitcoin alone, it could be possible, but it's going to take a much longer time than just buying a crypto, which in my eyes is I'm probably going to get flack for this, but saying just as good. But I think has a very good use case and a very good future ahead of it, and a much bigger profit potential. And yeah, if it's true, like no one knows for sure, but buying the second best crypto in the world, I think is a very good bet any day of the week. All right, so I have been talking for roughly 30 minutes. Are there any questions? Feel free to ask them. I am basically done with my story I wanted to do for this little live stream, and I will be trying to. They had a backtest function on this. Sadly, they removed it. They're probably going to re-add it, but I think spot auto investing is a godsend for a lot of people. And like I said, you can still trade on the side, but I think this is the way to go. And I'm gonna start doing this for myself as well. And I'll do the $100 one just to get. Let's shift that back to 100. Basically, to watch and see how well it compares to the last 5 years, because obviously prices were lower then. But like I said, I think Ethereum still has that 4x, that triple or 4x potential. It'll take time, definitely. It'll take time, but it's similar for XRP. Like, we're talking about the top cryptos in the world, so they're moving, but they're slower. They're moving slower than market caps below this. But I do think they have the staying power for the future. So you want to be doing this. You want to be DCAing into an asset that doesn't disappear or rug pull in the next 10 years. So you want to be absolutely sure that the token you're buying, the project you're buying, that it's gonna be there. Like, you similarly for like penny stocks, if you're buying a company, you want to buy a healthy company. You don't want to be buying stocks in a company that is going bankrupt in the next 5 to 10 years. Because if that happens, you lose all your money. And that's the one thing, like I said, that's the one thing we don't want to happen. And as I said, I think in crypto, especially in crypto, this is the safest, stablest, easiest way to build wealth, to genuinely build wealth in crypto. And I think I'm going to close out on that. So if there's no questions or no remarks, I want to thank you all for watching. And I'd say I see you all next week. I will be live in the Discord again on Wednesday, and I will be live next Friday on my channel as well. And with that, I would say have a great weekend. I know today's Thursday, but tomorrow I sadly have another appointment, so we're a bit early. That's why it's Thursdays with Frank instead of Fridays with Frank today. But I still wish you all a great weekend. Hopefully, stay safe and don't lose money, don't overtrade, don't use too much of a high risk. And yeah, I'd say have a great weekend, guys.